Hello everyone, welcome to Property Experts where we provide you information related to property in a sensible manner. Hence, before purchasing property worth lakhs and crores of rupees, please do watch our videos to never fall in any sort of a scam or a fraud. In today's episode, I will be talking to you about selling a property. If you're asking, selling a properties by NRI is the process same as the topper resident India, or does it differ in any matter? Selling property is binary. That tax implications and there are reputation issues. So right now, latest concentration on the tax implications first. When you are selling a property, the buyer can be a residential or the buyer can also be an NRI. Now, if the wire tax applicable to you and us to understand whether your sales is a long time capital gains sale or it is a short-term capital gains sales. Based on that, he can determine the rate of TDS, that is tax deducted source, which you have to deduct and pay to the income tax department. So you have to provide the documents to the buyer. The buyer can cancel that he is experts or chartered accountant and yes to determine whether the long-term capital gains will be applicable of the short-term capital of your property. So it is given by the laboratories of the income tax now. If your property value is below 50 lakh and it is a short term capital gains, it will be a 30% and above 50 lakh, 10% above to cross the search of the 30% or the 37% on about the search age. Does not education as a 4% which is applicable irrespective of the level of the same price. So it's complicated calculation. Can be very high but does not alternate option given to the seller and other income tax act. You can approach the income tax or the addressing officer through your charger accountant and ask the income tax department to determine the exact tax liability on the sale which is going to carry out the income tax department is at which you are going to sell. They don't give data available. The assessing officer will determine the exact tax liability which will be incurred by you and welcome that certificate that the buyer will be happy to detect the exact amount certificate. The buyer will be happy to detect the exact amount safe in that both sides and the bar also knows as that you have decided or directed the correct amount. Does it the buyer does not detect the correct amount tomorrow? Income tax notice to the buyer for short deduction of TDS with interest in penalty. So when the buyer can be liable to further taxes if not understood or if you considered as not given the correct answer. You said it's a 30% TDS. In case if it is short term capital gains, what how much will be the TDS applicable for the long term in kg with a long term capital gains? Any property which you have held for more than 2 years under the Indian income tax is considered long term capital gain. Then what purchase 20% charges? As explained, the applicable education service is not the tax but the accession. Does it have any index session benefit with respect to capital gains? That long term capital gains that like in case of this that the mutual funds are there. Any such benefits in the real estate as well TDS is only the tax detected source. But you have to file your income tax returns if the sale if the capital gain short term or long term minimum taxable income in India which is nothing but just 5 lakh. So you have to find your return for that particular year taxes and if correct TDS is deducted date of purchase 10 years back then the indexation charge or the chart for each and every year and that you can I know your personal at the actual purchase will get enhanced, your purchase cost will get increased, the indexation benefits videos and the tax liability is consequently gets reduced anyway. Old property which you purchased to say the year 2000 price but the fair market value as it existed on 1st of April long back, so you will not be getting the purchase value of that day. Rather on the 1st of April 2000, whatever is a fair market value announced by the government that is taken as your purchase value from their own words. The indexation will apply and based on today's same price, whatever is your profits of that you have to pay. That's right. The next question goes to if you have to repair trade this money, what is the process? What he has to fail the fasting that it has to be seen here is whether the property which is selling was purchased by him from NRI account that is through the inward remittances or whether it was purchased by him from his local Indian saving bank account or it can the property can also be called or the inherited property, so it's not purchased from the inward remittance, then he can only take the money out under the liberal remittance came up to 2 lakhs 50,000 per annum. So if he received more than that value, you ask to keep the money account, we can only take the half lakh, $400. But if you have bought it, what the property from his inward remittances, that is by tending the amount from abroad, and then he can repair trade up to 1 million without RBI permission. And if you want to remit more than $1 million, for that particular he has to take RBI permission. 40 today, and you forget that the distant future you will try to sell and taxation will come and haunt you. To avoid that, make sure that you maintain all the records of from where the payments were made, the bank statements, the images of the check, and all the transactions. These will come very handy at the time of determining the tax rating, the amount that is there. There are two forms which have to be given to the income tax department. On this form 15CA, which another himself can fill it up, simple data, and another himself can fill it up, which is to be fill up, or the showing that necessary TDS has been paid, the necessary taxes has been all the or have been income tax returns have been the filed. Those two forms most analyzed forget to fight because on the money it is received, on it is happens they just forget, so better to file so that you are not liable for any penalty for any other problems. So even everything being correct, but make sure you that you file both 15C and 15B from 15CA and 15CB, 15CA, and 15CV forms to be sure that everything is in order and the department is properly notified and there is no more penalties and serving notice. Why this is important? Some other money from your Indian accounts back to the place of your country. The forms will give a clear cut indication that you are not reactor. Hated the first money under the liberal remittance came. So that the advantage you can get on this one. Another question is that it reminds of NRI. Let's say a person from agriculture community, he goes abroad, becomes an NRI. He has the agriculture land and you can tell this land and repair his money. Are there any restrictions for them? You're not allowed to buy agriculture land or a plantation from your foreign inverter. But you can definitely inherit agriculture land or you can even receive a gift of agriculture land from a relation. It is not true for inward remittance. You can be only allowed to take under the liberalized remittance scheme of reputation of $2.5 lakh per annum. This is no question of buying and these things from the remittances that you sent from abroad. Norway problem that faces and rip, which you are those NRI have seizable and ancestral property. They have migrated to one part of the world. They have no intention to come back. Parents have left this world. They are left with real estate back home in India. How they dispose of this ancestral properties? Are there any specific processes clear to be operated, and is there any other tax obligations? Other than that, we are already described in this episode, there are no specific clearances required. Like any other property, you can sell this property provided your documentation with regards to the land or title are all up to date. So these issues you like to take care of through with regards to the land or title or all are up to date to these issues you like to take care of through property lawyer practices in the civil courts or practices for property matter. And to see that all your documentations have to be up to date, because any property, if the documents are not up to date, that is the first step you have to take. The second step is again when you are selling, but your status on the date of selling, and you are again liable for the income tax the same way remittance scheme, because this property has been inherited and not bought from your foreign environmentals, so it is governed by the other rules remittance. So it will not come under the 1 million for NRIs. They can't just take it out from the sale of ancestral property. You can always give part of the property to other family members. Name because in India there is no gift tax for gift within the family members. This time the duty which is in different states, but in Karnataka it is only 1,000 rupees if it is a gifted within the family members. Then each family member after sale of the properties entitled to take $2.5 lakh out in that year because it is gift. So after that, when you sell Nagara four sellers, rather than one seller is allowed to take 1.5 lakh, $1,000, and he can repair it. That's it. We call it a loophole system or something that you can do quickly to your money. For that, you can be a developed plot or even it can be a commercial property. Now on the section 54, the sale of a house, it will come on the sections 54. It will the sale of a plot or the sale of a commercial, it will go on the section 54. For both the treatments are different on the section 54 here. To only invest to the extent of capital gains determined after indexation. Question everything, whatever to your capital gain, only that much amount if you buy a new house. If a depot, if you buy a new house, then the tax library is zero. The department has put one more condition that you should not be owning more than one house at that time. 1+1 scheme tax completely by deposit by investing only the capital gains, not the same proceeds. The second section on the 54F were in respective of what type of property you are selling. You may have more than one house and you are selling residential house or you're selling a commercial premises that all are eligible for long-term benefit. Then you have to investing a process is a new and you will be examination from the tax. Just the capital one more section that is called 54EC is that a very limited benefit up to 50 lakhs you can invest in specified government bonds in a specified gains bonds where you will be able to examine from here. Thank you so much for watching this video. I hope you have learned a lot in this video. Do watch all our stuff so that you have no doubts regarding property. Thank you.